to invest, but you don't want to pick individual stocks. Good news, you've got options. Two of the most popular choices are ETFs and mutual funds. But what's the difference? First, both ETFs and mutual funds are like baskets of investments. Instead of buying one stock, you're buying a whole group of them. It's kind of like getting a variety pack of snacks instead of just one candy bar. More diversification, less risk. One key difference is how much money you need to get started. With ETFs, you can buy as little as one share, or even fractional shares if your brokerage allows it. But mutual funds often have a minimum investment requirement, sometimes $500, $1,000, or more. Here's where they differ. ETFs, exchange-traded funds, trade on the stock market, the exchange, just like individual stocks. You can buy and sell them throughout the day at different prices. Mutual funds, on the other hand, are priced only once a day, at the end of the trading day. So no buying or selling at 11 a.m. or 3 p.m., just at market close. Another key difference is how they're managed. Most ETFs are passive, meaning they track an index like the S&P 500. Mutual funds can also be passive, but many of them are actively managed, meaning professionals are picking stocks, trying to beat the market. Let's talk money. ETFs usually have lower fees because they're mostly passive, meaning they follow the index. Mutual funds, especially the actively managed ones, often charge higher fees because you have those professionals going and picking and managing these stocks for you. ETFs also tend to be more tax efficient. Why? Because when you sell shares of an ETF, you sell them to another investor. With mutual funds, selling can force the fund manager to sell stocks inside the fund, which might trigger capital gains taxes for all the investors. So which one is better? Well, it depends on what you need. If you want flexibility, lower fees, and tax efficiency, ETFs might be your jam. But if you prefer a professionally managed, hands-off approach, mutual funds could be a solid choice. Either way, both can be great tools to grow your money. So do your research, think about your goals, and invest wisely.